Well, hello everyone, and I hope we're welcoming back a number of you. This is the second part of our conversation with Sophia Li, the lead portfolio manager of the FSSA Japan Equity Strategy. In our previous conversation, we spent a lot of time really reflecting on Sophia's journey in the last 5 years, the opportunities, the challenges, and for today's conversation, we really want to be talking to Sophia and getting a sense of what she sees the future for Japan, particularly in a post-COVID-19 world. Welcome back, Sophia. We're really looking forward to getting your views and opinions about the opportunities for Japan in a post-COVID-19 world. Obviously, with the pandemic, global markets have all been impacted, and Japan has not been immune to this. It's fallen into recession, and this is doubling on the fact of the consumption tax hike in the last Q4 of last year. How do you feel you, the team, and the strategy opposition to navigate these headwinds? Certainly, chatter on the street seems to be that the worst is still yet to come. What are your views?
It was a mistake to increase consumption tax in the first place. This year, the net interest payment of the Japanese government would probably turn negative regardless of the consumption tax hike. The equity correction in first quarter this year was mainly due to the concern of COVID-19 outbreak, followed by the global pandemic. In anticipation of this, we have actually taken advantage of the market volatility to consolidate our portfolio into high conviction names and also buy high quality companies at a bargain. A large part of our portfolio today is actually invested into purely domestic companies with high earnings visibility. This includes the drugstore operators and the discounted retailers that offer daily necessities, software and IT solution providers that generate recurring annual income. Most of these companies had actually benefited from the tailwinds brought by COVID-19 thanks to the accelerated adoption of their products and services. On the other hand, among the companies with high global exposure, we've invested in strong Asian consumer companies that would benefit from local demographics and an increasing number of middle classes in the long run, factory automation companies that may benefit from the global supply chain diversification post the pandemic, and also the global technology and semiconductor leaders. Most of these companies have dominant market share in their respective industries and command very strong pricing power.
Out of interest, Sophia, do you mind sharing some examples of those companies?
A company that we've added to recently is GMO Payment Gateway, the largest online payment processing company. There's a lot of room to grow for this company thanks to the low e-commerce penetration in Japan, 7%, and has been accelerating. Not only that, the cashless payment penetration in Japan also quite low, about 18%, compared with the United States more than 40% and Korea more than 95%. The recent policies initiated by the government, including the merchant subsidy and consumer rewards, are expected to accelerate the rise of the digital payment. This would benefit GMO Payment Gateway, which has been actively providing the solutions for the offline vendors. And secondly, they have been building the next generation payment infrastructure with SMBC Corp in Japan, as well as the Visa card. Another company that we added to is Obic, the largest Japanese ERP software company. There is a strong case for the IT spending to accelerate in Japan in the coming years. A recent government survey showed that 80% of the large Japanese enterprises are still using the custom-made legacy IT system, 70% of which are too old and costly to be maintained. That would bring strong long-term replacement demand to Obic, which is the industry leader in the ERP industry. Another reason that we like about this company is its strong financial track record. It has delivered consistent profit growth in the past 15 years, even including 2008 global financial crisis. A strong management team also led to a consistent improvement of its operating margin to more than 55% this year, which is the most profitable among all the Japanese peers.
It's always wonderful hearing the history of these companies being weaved into your responses, Sophia. What about the structural tailwinds around the 5G revolution? Does that provide any opportunities for you?
In my view, 5G is simply a tool to enable a number of secular technological trends, such as AI, Internet of Things, smart factory, and cloud penetration. I believe that the global leading electronic component and semiconductor equipment manufacturers would benefit by selling the picks and the shovels in this gold rush. I think there are a number of examples in Japan. For example, Murata Manufacturing, which is the world's largest multi-layer ceramic capacitor manufacturer with more than 50% global market share. According to our research, the number of MLCCs used in a high-end 5G phone is estimated to be more than 30% higher than that used in a LTE or 3G phone. Other examples including Hoya and LaserTech, which would benefit from the increasing adoption of extreme ultraviolet lithography in the semiconductor manufacturing process. Hoya has close to 100% market share in the mask blanks used for EUV, and the LaserTech is also a monopoly in the EUV mask inspection system.
Let's talk about balance sheets. Japanese companies have gained the reputation of being great hoarders of cash, the point that it's almost become a virtue. How has this benefited the companies in your portfolio in this environment?
After years of criticism, the habit of hoarding cash may just pay off. Japanese companies have very strong balance sheets, and that would allow them to emerge even stronger post-COVID-19. Actually, more than 50% of the companies are in net cash position, compared to only 14% in S&P 500 and approximately 10% in FTSE 100. My investment style is to look for companies that generate very high return on invested capital, which truly reflects the strength of business itself. More than 80% of the companies in the Japan strategy are in net cash position, which is simply a result of their asset-light business model and very strong free cash flow generation. I think the strong cash position of the Japanese companies not only allow them to maintain or increase the shareholder return post COVID-19, but also provide them with a very big war chest to make acquisitions and attractive valuation. I think in the next few years, the strong Japanese companies are better positioned for the industry consolidation opportunities, and I think they can deliver higher growth than their global peers, which will be constrained by the high debt levels.
As we talk about a post-COVID-19 world, obviously travel has been hugely impacted and has ground to a complete halt. How have you managed, obviously you're based in Hong Kong, you've always been based in Hong Kong, but I know that, as part of the FSSA process, company meetings and on-site meetings are very embedded. How have you managed this complexity in this period of time?
Even before the COVID-19, we never had any problem in terms of maintaining close relationship with the company. In Japan, every year, actually, I travel to Japan twice a quarter and spend almost 1/3 of my time on the ground meeting the companies. During the pandemic, we still maintain a close relationship with the companies there by either Zoom meetings or the teleconference.
Just like us, Sophia. And unfortunately, this is the end of our two-part conversation. Thank you again, Sophia, for your time. Congratulations once more on the 5-year anniversary. Thank you to everyone that has tuned in and listened to this conversation. We hope that you have enjoyed it and that you have found it interesting. If you have any questions or if you have any interest in learning more about the Japanese strategy, please don't hesitate to get in touch with any members of the team. And we very much look forward to seeing you in person one day, or no doubt speaking to you via telephone or via conference call. Until then, take good care, and thank you again for your time.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书与投资人须知。